G'day everybody, John Seville here, Acorn Wealth, and its Executive Summary, the Open Range Special. Okay, well today the S&P 500 challenged the open range yesterday for Canada Day, and of course coming up to July 4th for our friends in America. But yesterday was not only Canada Day, but it was open range, the first trading day of July. The high of the open range was 2082.78, the low was 2067. So what we're looking for is whether the market closes higher or lower than that range, and that sets the high probability of where the market will continue to go until option expiration for the month of July, which is the third Friday. Now, on the monthly options. So today we made a higher high, but we ran straight into the moving average and we closed within the range. So in terms of looking at the bias from a open range standpoint, it's just even right now. Not bias to the upside, no bias to the downside. However, if we do look at the price action, we've obviously got condensing range candles, and the volume dramatically dropped as well. Went from 3.74 billion shares yesterday to 3 billion today. So, of course, tomorrow is a half day, so we can expect a lot lower volume, and that may confuse some of your volume-based indicators. But the way that we closed today, along with that weak volume, I think that my guess is that we're going to probably be heading down from here. Of course, a break above this moving average and a close higher than in the open range would indicate otherwise, but so far all signs point to short, which of course is why probably all of our short picks have done so well. Now, it was just the other day that we mentioned CRZO as a short on energy, and of course the stock that was setting up really nicely on the short side. CRZO was something we looked at there and has dropped beautifully. We were looking for a short at 48.80. It easily took that out. It's now down to 45.62, and you can see the volume went from 825,000 to 1.34 million, then 1.03 million. So doing awesome. If you look at EIGI, I haven't taken a position in this yet. Actually, I did take a position a couple of days ago. I got in a little earlier than I meant to, and stopped myself out. But this is now just about ready. EIGI, our entry criteria we discussed in the executive summary was 1930. The low today was 1969. So we're really close to an entry here. EIGI looking great. Heavy insider selling on that one. CTCT, Constant Contact, another one we talked about on the short side, also doing really well. It's just been curling over and moving down. Lots of red, even despite the up days in the market. This one hasn't been able to make any constant contact with its highs. I meant that pun. Anyway, and this is continuing lower. So this looks really good on the short side. Money flow just flooding out of this. And of course, we were looking at an entry here of 28.07, which we triggered through today. Okay. Next on the review is ASNA. I have an order in to buy this, short this tomorrow at, 16.35, a sell stop order. Everything's looking good. The money flow isn't as good as some of the other positions, but this is just rolling over, and it doesn't. If it can break the low here of 1640, that'll take it lower than the moving average, and it seems to be getting some good downward pressure. Hopefully that will continue. On the long side, of course, TDW. Has actually been fairly interesting because it's held up really resiliently and continued to hold the pattern that we were discussing in the executive summary the other night. You can see it had good volume up today, not as much as its volume down yesterday, but it's just condensing into that falling wedge pattern that we discussed, or downward channel. Either way, both bullish. And this could just turn right here around this level. And of course, we talked about an entry at 22.13. The low was 22.04. So this one will be something obviously we'll continue to watch over these next few days. Now, I'm hesitant to to talk about too many new stocks, but because there are quite a lot, obviously already both on longs and shorts. But here's one for you. In the retail sector, obviously the lot of the retail stores have done very poorly. One that I've had on my list since, since back on, about 3 days ago. Is Mens Wearhouse. This looks great. It's just stair-stepping down beautifully, and I think that basically a short anywhere kind of under the 63, 65 area. So depending on where you can get it for, it closed at 62, 62. If it closes lower, so if it goes lower than 62, 52.52, I just enter there. So I'd have a sell stop at 62.52, but I'd also have a sell limit as an OCO order, which means only one of them will trigger. So either it rallies up to 63.56, or it goes down to 62.52, and whichever hits first cancels the other one out, so you don't end up shorting it twice. But for a target, I mean, obviously there appears there's going to be some support here around $60, but I would play this much like we're playing the other shorts, which is just to continue lowering the stop loss as it moves down, because this could get all the way back down to 56 quite easily. Now, having a look at the money flow, you can see that is fairly negative, and certainly more negative than where it was previously. So we've got a lot to look forward to. Next week's going to be a huge week, so obviously keep your powder dry, make your stops tight, and make sure you tune into the executive summary next week, because it's going to be packed full of stuff. And if you aren't a member of our executive summary service, go to acornwealthcorp.com, click contact us, and let us know you're interested in trialing the service, and we'll make sure that you can get these types of updates every day. All right, that's John Seville's Acorn Summary, and happy trading.